Ladies and gentlemen, sorry for delay, but now we are live with one of my greatest colleagues here from Switzerland. It's Jean-François Carbonneil-Redrezza. If I pronounce the name correctly, Jeff, please, can you pronounce your name as it should be?
Oh, okay. I mean, that's very kind of you that you try to pronounce my complete name. But Jean-François Carbonneil is enough.
Okay.
About the rest.
Yeah, Jean-François Carbonneil. So please join me welcoming Jean-François in our Credit In. And today we are speaking about credit management in Switzerland. Despite the fact that I live in Switzerland last 15 years, I decided that today we would need to speak to somebody who is, let's say, originally Swiss, who spent most part of life in the Switzerland, and most importantly, Jean-François is one of the exceptional credit managers for today's role, because, as I mentioned in the announcement, Jean-François is actually dealing with nearly every business in Switzerland. So, because Jean-François is head of credit management in Lyreca, Switzerland, and they are delivering office supplies. And I don't know how big is your customer base, Jean-François?
Well, it depends where you are asking to. I mean, sales would say maybe 60,000.
Okay.
Controlling would say maybe 40, and I say it's somewhere in between. I would say 50,000 B2B customers.
Yeah.
There is one point with Lyreco is that we are a B2B business, dealing with companies, and we shouldn't have any private person in our customer base. So look at, I think there is in Switzerland approximately like 300 to 400,000 companies. I'm not sure if you have this issue with the echo.
No.
No, okay, that's fine. So, okay, we have like 40,000 companies. A lot of them are very small individuals, and covering already 60,000 of them, it's quite a big number. And I can imagine that not so many other companies in Switzerland may have access to such a customer base.
So we're speaking about 300,000 customers, so let's say companies registered in Switzerland, if I understood you correctly. And yes, you are dealing with 60,000, which 1/5 of them, or 20%. But that is actually our discussion before today's air. I don't know anybody else who would have such a big customer base, especially in Switzerland. But coming back to our point and coming back to our question, so let us start the bigger part of the main part of our today's air. And the main idea of Credit In is to get knowledge about doing credit management in local in local places, in local countries. We all understand that Switzerland is surely not the biggest country in the world in terms of geography and in terms of population, but in terms of finance, Switzerland is quite substantial. So I'm pretty sure that a lot of people are actually interested to know what does that mean, dealing with Swiss. So our traditional question for Credit In, well, I can tell you I can tell many things about Switzerland. But main thing, looking from outside, taking into account that you are Swiss citizen, and you are doing business in Switzerland, do you have any certain tips and trips for foreigners, for travelers, or for those who are who are making business with the Swiss company? What are the particular do's and don'ts in negotiating business with Swiss people?
First of all, I would like just to do a small correction. I'm not Swiss.
Okay, sorry.
Well, I'm French.
Okay.
And I'm living in Zurich for now 25 years. So
So
slightly
you decided not to become Swiss, despite that fact.
No, not yet.
So, ladies and gentlemen, please welcome Jean-François Leroux. There is another exceptional side of him. He is patriot in France, but you are dealing with Swiss.
Yes, of course. Yes, of course. And right now I'm in Zurich,
Okay.
so close to you probably.
No, I'm in Geneva, so we are in two completely different parts of Switzerland.
Okay. And for me, it's just not for kidding you that I'm not Swiss. I'm French, but it brings me maybe to to my opinion, one of the most important points when dealing with businesses in Switzerland is, as you of course know, you have three different men's areas with three different languages.
Yes.
And if someone would ask me and to start a business, I'm not an entrepreneur, but I would say, look, there are big differences between the different areas of the country. Switzerland, I found it funny because the first credit in you did, and I look at them, Andre, you went to Malta and then to Ireland.
Yes.
And I was wondering why you started with really small countries. You're
No, look, if you want to know, if you want me to answer this question, it's quite simple. It mainly depends. It's not a choice of specific country. There is no specific order of countries. The idea is to cover the whole globe and to get know about all the cultures. And the schedule is actually defined by the availability of people. For instance, I had commitment for Poland, to give you an example, but Poland will be on May 16th because Robert Dirch is not available earlier. The same story it's not about big or small countries. It's about like doing global trip.
No, but as you said, Switzerland may be a small country, but still remains within the top 10 worldwide in GDP.
Yes.
So back to your questions, I want to try to give you an answer. It's that I would recommend to start business to try to consider that the French-speaking part of Switzerland is culturally very different from the Swiss German-speaking part of Switzerland.
Yes.
And also you need to consider the Italian-speaking part of Switzerland.
Yes.
Because I really want to be fair with the Swiss people, I would say that there is another region with the Romansh-speaking part of Switzerland.
Is that it is in the southeast of Switzerland.
Yes, right. It's this Graubünden, Engadin part, and very nice, by the way, if you want to go there for skiing, beautiful, and in the summer too. So considering these 4 different languages in Switzerland, you have four or two main types of cultures, and they are really somehow different. And I think you won't be able to. So you should try to fit your communication with the culture, with this, I would say, kind of Swiss. Are you speaking to a Swiss German, or are you speaking to a Swiss-speaking, French-speaking Swiss? You know,
Well,
in the
that's the thing I wanted to point myself, because I wanted to say that first rule of dealing with Swiss people is to never call them either French or Italian or German. They would never recognize, they don't feel themselves either German or French or whatever. No, we are Swiss. First of all, you need to remember that you are addressing Swiss person, whatever language this person speaks.
Absolutely, absolutely. And if you try to understand why the Swiss people do react that way, is that you have to imagine that very small country, approximately in the middle of Europe, and historically it used to be surrounded by really countries that had economic and politics really weight. You have Germany with
Austria, France, Italy,
France, Italy. So the Swiss people, they somehow needed to find a way to define who they are. And of course, they used to be influenced with the people they are living just beside. So the Swiss guys living in the area of Geneva and Lausanne, they used to mix culturally, economically with France. And the same for the Swiss German part of Switzerland, and for Italian Swiss speaking part of Switzerland. And they develop some kind of habits, customs that are common with those big countries, so big influences. So clearly, if you want to deal with someone from the Swiss French-speaking part of Switzerland, you will find somehow this French touch. And if you try to deal with a Swiss German, if you are dealing with a German-speaking Swiss, you will it will remind you of this German flair from the country, and the same for Italian. So you really can travel within Switzerland, just sitting at your desk, and it's a good idea to adapt, and it's a good idea to understand to whom you are speaking. I will give you a brief example. I'm looking at my GSO per area. German-speaking area of Switzerland, French-speaking area, Italian-speaking area.
So you got your portfolio split by culture.
Yes, and now I'm speaking about DSO. Just to have a KPI. And I have a DSO in this French-speaking part of Switzerland that is almost 1 week longer than the Swiss German-speaking part of Switzerland. Wow. Imagine culturally a guy in Geneva more relaxed on paying its invoices to Lyreco than a Swiss German.
And how about Italian? Italian part, sorry. How about Ticino?
It's not too bad. Not too bad. It doesn't reflect the situation you have in Italian. It's not that bad.
So yeah, and but again, so as we are speaking about cultural difference, we so I mean actually cultural specialities. When we speak about that, I understand your answer that when you deal with Swiss, you need to understand what specifically Swiss we are talking about, because Swiss Romand or French speaking or then Ticino and then German speaking part, there is something in between. Because I do believe, if we go that deep into details, that, for instance, Canton Valais or, Valais or Freiburg will be different from Zurich.
Absolutely. Absolutely. And if you want, because originally your question was if you want to do business in Switzerland, there is something due to the fact that Switzerland is so small, and people used to know each other very well. Yes. And in some areas of the country, you really need to get introduced.
Yes.
Work with people. This is something I always or often hear from the salesperson, that Lyrico in Switzerland is having like 140 or maybe 180, I'm not sure, sales guys and ladies driving through the countries to manage their customers. And it's something that you have to be aware of. In some areas of Switzerland, if you want to do business, you need to be introduced, or you need to know someone.
Yeah, because that's what I've learned myself. You may be invited for the party, but if nobody would introduce you, you will stay with your glass alone till the party is closed. And this will be absolutely okay, because we were not you're not introduced. So you need to be introduced to somebody. And what do you think? Because one of the things which Swiss people you're normally proud of, and one of the sides what I have seen in my life, it's that it's a tendency or trend to get the maximum possible quality of what we do. Is that something kind of characteristic? So like Swiss people used to provide higher quality and they expect high quality. Or is that something, let's say, rather general habit?
I mean, they used to do and produce high quality, that's for sure. But somehow I have difficulties to answer that kind of question, because if I would look to my job, because of that numbers of customers, sometimes we cannot really go into details.
Yes.
And sometimes I'm really aware that maybe our customers could like have a sense of we are missing of flexibility.
Yes.
But serving so many customers, we need to find categories, and we need to,
yes. But I'm just asking in general.
So quality, if you want to do quality, you are an artisan. You are dealing with one piece at a time, and you are doing a nice job, and so. But honestly, if we are speaking about what we do, sometimes we have to categorize and to deal with masses. So not many times it's quality, but it's not time to deliver first quality.
Yeah, so but that speciality of our job. Sometimes, especially with the bigger portfolio, it's quite difficult to see person beyond the numbers, beyond the sum. But you are living surrounded with people. I was just about that. So how is difficult, whether or not Swiss people normally are difficult to speak? Okay, you get introduced, and when we do credit management, is it difficult to get in contact with them and to reach an agreement, especially in terms of, say, personality, local traditions, or things like that?
No, Switzerland is absolutely complete, modern, open country, multicultural. There is no difficulties to speak to customers, but there is something you need to know is that it's quite difficult to get the figures from your customers, from your counterparts.
You may have figures, you mean getting in touch is difficult, but then working it is not. That's what I found myself, is that it is huge issue to get in touch and to start business. But when you already started, when you already introduced, when you already entered into contract, dealing with Swiss people is one of the easiest thing in my life, actually.
That's true. Absolutely, that's true.
Because that's kind of quite high level of, first of all, respect. That's what I found myself. Second thing, respect to contract. We agreed, we signed the paper, and then we do our best to, to fulfill it from both sides. If we continue to do so, this business could last for years. It's not tens of years. Just like this, because here what I found, people like they like that predictability, they like that reliance. So it's very difficult to get the contract, but when you have it, you just supply and you get paid, and everything works plus minus like this. No changes. If there is an issue, you can discuss. And that orientation, because I like that in French, one of the answers which really impressed me, I don't know, I think in France it is not that common. When you say thank you to Swiss people, they say service. Which means that always at your service or something like that. So it's just our job.
It's included in the price.
Yes, it is included. Service included into the price. Yes, absolutely. And as you are dealing with the Swiss market, can you please highlight a bit of economic trends? What's going on in the local economy in Switzerland? Do you observe any specific trends, any specific issues, maybe any positive trends? How is the business in general in Switzerland now?
There are a lot of positive trends. The Swiss economy is very strong, mainly in the tertiary sector. You have tertiary, the third sector.
Okay.
The finance industry with the banks.
Yes. In finance, yes.
I think it's like 70% of the GDP with services, all services sector. And then you have a strong manufacturing industry too, contributing to 20-25% of the GDP with a lot of export. I once heard, I don't know if it's still true, but I in the past I used to hear that 1 Swiss franc out of 2 was earned on export. So it's a strong economy. I can imagine everybody knows it. Everybody's have heard about Switzerland, about its banks, and it has been also very resilient over the really last decades.
Yes.
It's a growing economy about the last decades. And well, at that point, I don't want to be pessimistic, but Andrew, I can say that my team and I, with years of experience and with all the companies, firms in Switzerland, from really a small one to the biggest one we are dealing with, we used to develop like a very good sense of the how our customers, how are they doing financially. And it's concrete because we are dealing with them every day, with delays, we are with new orders, so we know the volume of new orders, we know how is the cash coming in, we know when our customers have some difficulties to pay, we can register everything. And honestly, there is now some indicators that I'm going to be worried about. Yes.
If you can share something with us, or is it a secret?
No, it's not a secret, but there are bankruptcies. And it's not only the zombies companies that finally are dead. There are jobs are getting cut in industries that you are not used to, like the pharma industry. And the delays of payments, they increased. I had the figure in average. Last year, it was still 40% of all invoices that were in delays. This year, year to date, is 60%.
60% of delayed payments?
Of invoices being in delayed, payment delayed.
Out of the portfolio. So let's say 60.
No, it's a benchmark in Switzerland. It's not my portfolio.
Okay. Yeah. So, but what? Yes.
And I couldn't say how's it's weighted. So I don't know if there is a specific industry in that figure. But out of my portfolio, I can say yes. Times are getting somehow a bit critical that they used to be. We had really the chance to do the job as a credit manager. You know, it's a very pleasant job. Most and much more when you have a team, and I have a really good team I like to work with, so we can enjoy the job, try to be always more competitive, more efficient. But when things are going a bit out of the rolling like it used to be, and we start to have the first difficulties, and this is what we now what we notice, yes, credit management can be very, very hard job.
No, that's because I think these are the numbers you mentioned about slowing down of payments. They are coming from your capacity, ladies and gentlemen. If you don't know, Jean-François is a very active member of Swiss Association of Credit Managers, so he knows the situation quite deeply. But can you please a bit elaborate? You say there is like growth by overdue by 60%, or I believe I misunderstood.
No, this is in 2022, you had 40% of all invoices in average over the year that were delays in the payment, that were overdue.
Regardless the term, so it could be 1 day overdue or one
day overdue, yes.
Okay. So starting from 1 day overdue and onwards. Okay.
Exactly. And if I'm not mistaken, I need to check, but this is the figure I have from Atradius. And 23, the average was 60% of invoicing being with delays in payment. So that's
But this is like plus 50% to overdue, so which is quite serious. So payments are slowing down. You say it was 40%. Let's say, if I understand the logic of Atradius correctly, they did the research on Swiss market, and what they found is that 40% out of all invoices issued in this local market, 40% was delayed for at least 1 day.
Exactly.
And
exactly.
now this number, this was 2022, and now in 2023, despite the fact that we already got rid of COVID and all the issues like that.
No, Andre, no. Because if you look at the major crisis, you could say that the worst of the impact on the economy used to arrive after 2 to 3 years after the crisis.
Well, yes, I understand that the majority of bankruptcies I actually saw, but all the negative impact is coming after the crisis. I understand. So if we consider COVID as a crisis, this means that now we still are, we just started to, to see and get visible all the consequences of COVID. So that's what I'm trying to, but I just wanted to understand that if, let's say, 40% was delayed in Switzerland in 2022, and then if in 2023
it went to 60%.
It was high. It grew up to 60%. So it grew up by half. So, and I believe you can feel it on your portfolio.
No, not really, because I have a lot of securities. There is something. One thing very important to understand looking at the business model I am working with is that we are delivering office supplies and also a lot of coffee. And it's honestly, when our customers are being late in payment and they do not pay after the last reminder, we block delivery immediately, automatically.
Okay, and this means so you are those guys who can enjoy that luxury to
absolutely.
To stop line, but that's okay. But this I don't think this is in this case you've got very strong credit policy. You can afford it, but what I'm really interested about is that there is growth in terms of overdue in the Swiss local market, but you say you don't feel it on your portfolio.
I do not. Something maybe
you don't see that payment delays. You don't see that. You don't see it that strong, as strong as it is going on the local market.
No, we really definitely have to remain very strict on the payment terms, because they are worsening. Look, we just only had the COVID crisis. We have in Europe, the economy is really suffering.
Yes.
It's not good. It's not good in France. It's not good in Germany. It's not good in Italy. So it's not surprisingly that Switzerland may be impacted and start to be impacted by the situation in Europe. And I can definitively confirm you that the payment habits is degrading.
Yeah.
Is worsening. I can confirm to you that the use of supplier credit is trendy, really, much more as it used to be over the last 10 years. It's already started, I would say, like 2 or 3 years ago, when the borrowing money started to be expensive, much more expensive, with the interest rates increasing. And it was like very, very fast reactions of the big companies, the corporate companies, not only the Swiss one, also the international ones active on the Swiss market to ask for extensions of the payment terms, because it was cheaper to get the money from the supplier than from the banks. And today I can notice that there is an increase in payment terms for supplier credits, but it's not because of the interest rates, because the interest rates, they are now deflating. It's because of the liquidity.
Well, I would say it's not about. I would say that there is one more item in this line. It's not only about, maybe we can call it liquidity as well, but this is the growth of global trade finance gap. I mean, I'm discussing this, let's say, nearly every day now. It's quite interesting that if you look at the transaction of a customer or between two companies, you understand that the specific supplier or specific user of finance can afford quite high interest rates. So, I mean, for us both as credit managers, I can tell you quite simply that the company who is making 10% margin can easily afford financing of 20% at 20% annual rate, just because they tend that financing 12 times during the year. So for them, and each time making more money, so 2% per month is actually affordable. What they cannot afford is that when they need, let's say, 100,000 and they are given 10,000, they cannot grow with that, being underfinanced. And this is the real idea of actually the bigger problem for smaller companies or for the companies in general is not only high or small interest rates, it's availability of, it's a liquidity issue, meaning that it's availability of credit. So for company, specific company can serve, let's say, 10 customers, but they serve only 2 just because of the financing available. And this is what, I mean, I think you know that there is what is called global trade finance gap. So Development Bank of Asia does a research. I think last time they did it in 2021. They found now the total credit rejected by banks around the globe, but officially requested by companies. And this was $1.8 trillion around the globe. And it is expected to grow up. And, and because, companies get bankrupt and, got difficulties because of the liquidity issues. I do believe, as we both are credit managers, that there is a huge amount of job which must be done by suppliers themselves. There are lots of things they should do. First of all, apply proper credit management for their accounts receivable and accounts payable. But availability of finance, in some cases, financing must come. Otherwise, these businesses will never grow up, and if they will not grow up, if they have no chance to grow up, they will not create jobs, and the economy will not be doing as good as it should. Yes. Absolutely. So you feel it that you feel it yourself, all this downturn in terms of financing and liquidity. You can feel it yourself.
Yes, absolutely.
Okay, but we come back to Switzerland. So the economy is still strong. Swiss economy is great, but as I am involved in operations with the customer information, is quite interesting thing, and we are getting to the moment of legal side of doing business. Are there any kind of special themes of doing credit legal sides of doing credit management in Switzerland?
No, there is one big challenge, and it's very interesting to know it, is that you won't get the books from your customers if they won't show you
this is the side. So that's what I wanted to mention, because
so you have to try to.
No, it's okay. That's what I wanted to mention in the beginning. Switzerland and United States I think it's a great example, let's say quite exceptional example of very strong economies which are get closed in terms of customer information. So everyone can check the customer address, registration, everything, but financials, sorry.
No. If really you are maybe in the commodities trade, if you are a bank, if you are an insurance, your customers, they won't show you their financials. No, sorry, they will show you their financials.
They will, but when you are the bank, because otherwise they will not get your product. But when you are the supplier of goods,
well, if you are their A supplier supplying the raw material they need to work, they will also open their books and show their financials. But for the rest of the economy, for let's say 80% of the trades of the business, it's just based on soft facts. It's just you will take your credit decisions not on financials. And this is something I really love to speak about with my colleagues internationally. I don't do any credit decision based on financial. I do them only on soft facts. And you know what? I really have the feeling that it's really accurate.
Well, you see, we may speak because that's my favorite topic. And by the way, in such an environment, you as a credit manager quickly learn the difference between risk assessment and credit decision. These are not two connected things. So they are connected, but it's not like risk analysis is ready-made credit decision. If you do so, if your company would do so, you won't have a job, maybe, or it would be because you won't have any customers. Quite simple. Second thing here is, okay, by the way, the second thing here is that risk assessment is only one component of credit decision, because you need to take into account payment terms, credit demand, and because the credit decision in general, correct me if I'm wrong, is about offering a competitive terms to your customer with inclusion of credit risk. You might skip credit analysis, but you have to offer certain terms to your customer, and this is already a credit decision. It's not like I don't deal with this customer because I don't like them, or because they don't look bad, you don't look good, or because of something. No, we are doing business.
No, of course you have like this. You know what you can do. You want to protect the cash, and you know what is the space you can play with in terms of how long you finance your customers. But maybe one thing very interesting is to decide which customers you want to finance longer, and what you can get if you are cash rich and you can afford supporting business with longer financing.
Yes.
Then very interesting is try to obtain a counterpart. It's not just to extend for extending.
Absolutely.
But it's just like to manage to say, look, we want now to negotiate because we will be glad to financing you. But we are looking for that business of you for years now. So could we get it? Maybe if we grant you longer payment terms. So this is also a part of the credit decision. Is what can you, what is your payment terms extensions, risk appetite increase? What is it worth for you and for the customers? So it's not always easy to gain something by extending payment terms, but it is something I love to challenge. I love to try to say, look, dear customer, I will be really happy to financing you with longer payment terms, but then would it be possible to speak about that kind of more business with you? And
yes, another business line, because yes, we provide credit to get more sales. If credit extension is just made for credit extension, there is no, but I understand that you really like and you really love that commercial part of credit management where you deal with the customer. That's really a pleasure of doing that.
Yeah.
That's really a pleasure. No, not just like, what can we do for you? But at the same time, in order to get there or to cooperate together and so on and so forth, that's really a relationship.
But this is also something that comes is when you are dealing with multinationals, big companies. They used to come to you, and with all my respect, but very disrespectfully, and say, as from today, we are going to pay you after 120 days. And you say, come on, stop. You say, stop. And sometimes, because they are the big your big customers, you know, in value and maybe in margin, you can't really say no, and there is no risk, short to middle term. You can't say no, but it's very hard to accept to give so much and not receive in counterpart.
Well, yes.
That's why it's very important always to try, although it is my opinion and the way I like to speak with the salespeople here, is to say, look, of course we can discuss and what do you think? What could we get more from your customer? What could we sell more to your customer in exchange to the payment terms?
Yeah, I do remember.
Sometimes it works.
Well, yes, the same story with financials. You know, I do remember how once I got financial statements from company in Middle East. It's just obviously it's a question of argumentation, but I think I was speaking with my former team. They still receiving financial statements from this customer.
Okay.
But coming back to credit terms, we will discuss later what are the terms, what are usual terms in standard. But you know, with the big companies, once, by the way, I do remember, because you just like touch the stream. We had exceptionally quite big retail chain. And they send us like a letter with, please sign this additional agreement because we want to increase payment term, and we believe, and we think this is like grounded. I said, please, here is the contract we signed 3 years ago. And we need to countersign that. So if you want us to countersign, let's discuss. Just, as a matter of respect, because otherwise, if you insist that credit terms must be 90 days, not 30, I do believe that credit terms must be 15 days. So let's have a discussion. Well, this is exceptional, but sometimes, yes, sometimes you just don't do that. But you see, this is somehow connected to credit risk and what is in it, because I really want to know your opinion. You see, when we speak about credit risk and trade credit, is generally not a question of risk appetite. So how much risk we want to take. It's mainly a question how much risk we have to take if we want to do this business with this number of customers and achieve this level of volume, this level of turnover.
Yes. For me, it's also much more. Honestly, I know what is my budget.
Yes.
In terms of bad debt, for example.
Yeah.
And I will try to allocate my risk appetite, and I will try to allocate my bad debt budget where I see that there is a more chance to try to help growth. Because honestly, I know we always say credit management should be a part of, should aim at sustainable growth and develop business, but it's very theoretical. It's very difficult to do. Real credit management, we are not really saying,
In
anything.
practical terms, yes, this is a bit different. I agree with you.
But what you can do is try to take the risk when you see really an opportunities for a profitable growth.
Yes.
So it's going to be 10 for that customer, 10%. No, it's like, okay, on that one, there is a risk, but I see a return. I see a possibility of return. Typically, I had that on my, I had to work on that, a group of customers in the Geneva area. It's a risky group. It's in the hotel and gastronomy branch.
Mm-hmm.
So it's a higher risk profile, but we had a chance to enter the organization, to start business with this group with 10 to 20 entities, and at the end quite a nice deal with risk. And I said, okay, from my budget, I want to I will invest so many in that customers. And you know what? That time it was bad luck. Because I've done losses, but yes, it's part of the game. Sometimes sometimes it's going to work. You see the risk, because honestly, I want to come back to that point. It's interesting for us during that call is that to understand in Switzerland, you will not get access to the financials, so you need to rely on the soft facts. And this is a great analysis of everything: the type of the company, how old is the company,
yes.
Who is managing the company, in which sector, which branch, which area, and most very important in Switzerland, if you want to get insight about the solvency of your customers, try to, and it's very easy in Switzerland, try to get the payments habits of your customers.
Through the trade references, and how do you verify trade? Because this payment behavior is an important thing. Because
for me, it's the most important. I can, you have this Bohemian tradition to read in in the crystal ball.
No.
And I can tell you something. I can read in the payment habits of my customers.
Yes, that's because this is on your fingertips. You can feel it with your nervous system. And by the way, would you be able to confirm my personal theory about the, let's say, sensitive connection between credit manager and his or her portfolio? Because I believe there is intimate connection somehow between credit manager and portfolio, and it's like from fantastic movie. The credit manager is actually a brain in the nervous system which is connected to credit portfolio. And in the end of the day, you either feel it. You cannot work with this mathematically, although mathematics does lots of job, but you need to feel the connection. This, by the way, is not really, it's not really an esoteric. I was making one course about, in banking system, connected to banking. It was a course about portfolio management. And the course leader surprised me with one sentence, which I now repeat every day nearly. He said that success of credit depends not on quality of, scoring models. It doesn't depend even on structuring or many other things. The only thing success of credit depends on is the knowledge of creditor or supplier, but actually not even knowledge, understanding of business of the borrower. The better you understand their business, the better credit you do. I put it as a slogan because every time I teach credit managers, I say, gentlemen, whatever time and efforts you spend on learning about your customer, learning about their business, learning about how they operate, the more time you spend, the more time and efforts you spend on it, the better job you do in the end.
Absolutely. You are
always like this. You cannot do credit management based on like portfolio analysis or customer analysis and even payment discipline. Situations could be absolutely different, but you need to feel your portfolio. You need to know as deep as possible the business of your customers. May I just ask you as a last question, because we already covered payment discipline, we already covered nearly everything. Can you please let us a little bit know about the, let's say, general credit terms in Switzerland, at least in your area of business? Because I know that even with doctor, you normally have 30 days credit term. So 30 days is just like by default.
Yes.
Is that the rule for, let's say, for the bigger part of the business you do with your customers?
No, well, absolutely. That's correct. You have good information. 30 days is quite common in the B2B in Switzerland, B2B business. Of course, if you are dealing locally, because I don't want, if you want to speak about exporting trades financing instruments, if you are on export, I guess you will use some tools depending on the country risk. But in Switzerland, our customers, companies, that they are, in any case, they are waiting for credit terms. If you say you need to pay on receipt or you need to pay by credit card, because Lyreco is a web shop. So, you could imagine that a lot of payments will be done by credit cards, by means of credit cards, but absolutely not, because our customers, they want to have this supplier credits.
So meaning that when you deal with somebody or you start business, it is by default, if it is not discussed, the customer expects about 30 days payment term.
Yes, and it's going to be for you very difficult to try, for example, to enroll your customer for credit cards. And when I speak to French credit managers, they explain me, that type of business, that size of business, we are going with credit cards with direct debit, a lot of direct debit. And I say, well, you know, in Switzerland, that they want to use the financing, the supplier financing. You won't sell to a company in Switzerland who is credit worthy. They will claim for payment terms anyway. They want to have it. So forget in B2B, you need to, if you want to be competitive, you need to provide a payment terms. Then what I see is going from 10 days to 30 days. I would say 30 days is still normal in Switzerland, despite the incredible pressure around Switzerland. I mean, you have countries on the south with 90 days. You have internationals payment terms with 120 days, 180 days. That's all the kind of stuff. Forget it here in Switzerland.
Forget it depends on business.
For consumables.
Yeah. Yeah. So, you know, because that sometimes people, you know, what I found myself, and when you deal with, you know, Swiss companies who are purchasing, they don't even, well, they don't even say this is kind of, because they don't even say this is credit. No, it's just normal way of doing business. The most part of people understand that this is credit, but you know, like in trading business, I do remember, you know, I had conversation with the supplier who wanted payment terms. Sorry, who wanted an advance payments. And at the same time, they provided like list of requirements to a customer who pays advance payments. So and I was negotiating with them on the side of customer and say, sorry, we are providing you with credit. They say, what? You are not providing us with credit with your advance payment. You are just paying money and got goods. I said, sorry. Being on your side, I would say the same, but at the same time, we send you money and then you are able to do with this money whatever you want. So please, let's give things, you know, let's call a spade a spade. These are the things. Jean-François, thank you very much for this great overview. We have a question from Marta.
From who?
From Marta. You will see that in comments later on. Which soft facts you mean for the credit analysis? So when we speak about soft facts, let's say I do believe you have quite big number of that facts, so quite a big number of items. Can you please let us know? I will modify the question a bit. What are your top 5 factors you use to assess, which you use in your trade credit, in your decision making?
I like to work with how old is the company?
Yes. So time in business, this is one.
The time in business. I like to look at the branch. I mean, no, it's not. It's which sector of the economy?
Okay.
Is manufacturing? Is this, what kind of business do they do?
Type of business and industry.
Type of industry. Thank you very much.
Yes.
The payments habits, all the information you have on the payments habits of your customers.
So payment behavior, payment history.
Payment history is, to me, it's the most important.
Okay. And any other two?
Focus on this one. If so you are focusing on these like three
payment history, so you take, let's say, the payments, payment behavior, then you take, let's say, industry, and then time in business. So is it new company or is a company with a history?
Yes, and also maybe if you want to have one point more is to look how long in business and with which kind of stability in the management. or in the ownership. It's
So if you can set a criteria, do you mean that if what is the experience of current director,
yes, exactly.
current owners, chairman of the board, and others?
Yes, and maybe just as simple as is this company changing its top management every 2 years or every year, or is it like constant in time?
Okay.
It's really
Because
that kind of informations give you a lot of insights about the creditworthiness of your customers.
do I understand correctly? So continuing to asking you, do you understand correctly that when the company changes owners and first of all managers, so those who are, let's say, people who are who are in control of a company, does that mean that if they change quite often, let's say every year or every 2 years, this is mainly the question of unpredictability, because new management might behave differently in terms of payment, in terms of relations, in terms of that? Or how do you treat that?
Honestly, I couldn't answer for big companies, but if you are dealing with SMEs, typically those companies whose ownership management is changing permanently, constantly, they have a high risk of default. I mean, it's just, we are learning like machine learnings with the years of experience, with the thousands of business cases you had, with the daily management of all this. Like you said something with the fingers. I don't remember exactly, but
yeah, that's on your fingers. You feel it.
Yes, it's on the fingers.
You feel it.
So
It's not really a feeling, honestly, because now what we know now from if I can translate that correctly into English, this is kind of quick knowledge, because you don't need to put that. If you do things like you do the same things for quite long period of time, you can feel let's say unusual behavior of the component, just like this. I mean, somebody tells you, no, it's not normal, because you see, that's quite, by the way, as we speak about credit management, some people call me idealist, but if you give me just maybe a couple of minutes to explain that, and the audience will be passionate to me. You see, when we speak about credit management and ideology is quite simple, because we don't want, even us as credit managers, unless we want to do something contra our business. What we want our customers to do three things. Only three things. We want our customers to buy our goods, to pay for them on time, and order again. And again, and again, and again, and again. Because this is actually the cycle which generates profit. We don't need to invest additional money into marketing, because we already deal with these customers. We don't need to waste our time to collect cash, because they pay on time. The real issue is to organize all of that. And, getting from that theory, normal, or let's say qualified credit manager with experience with a specific portfolio gets really a knowledge and a feeling how the normal customer comes and operates. And each time you got, call it bad feeling, or something which is not in line with that simple idea, you understand that this is already an outlier, which means it's already a risk.
Absolutely.
It's quite easy to explain, because we know ideology, we know the way how to onboard the customer and how to get this customer working with us. We don't say how to collect money, because collection, or let's say collection efforts, is already a cost for the company. Somebody needs to take a phone to give a call to a customer, then the customer says something. No, we need to make our operations as smooth as possible. That's quite simple. I mean, quite simple to say, but very difficult to do. And since the economy is not going
that good as it used to be.
As good as it used to be, but that's
the future is coming. You know that.
That's why we love our job, because credit management is actually serving the portfolio, adapting it to the needs of business. Sooner or later, we need to change terms and everything. That's by the way, we had a quite big discussion on LinkedIn whether or not the company would need a credit manager.
Yes.
If all customers will pay on time. Absolutely.
Oh, by the way, I really loved you had this credit manager from Ireland. I don't remember his name.
Yes.
Ireland.
Yeah, Declan Flood, yes.
Cool.
Yes.
And then he said, you know what, Irish people, they are good payers if you remind them that they have to pay you.
No,
I thought it was exactly, I could exactly say the same thing for the Swiss people.
Yeah.
It really made my day, because
Declan has another great, that's, but coming back to what I just said, Declan is great. That's why, by the way, I think he was, I started this credit in Syria from Declan because he's so great person to speak with. I wanted to open with him specifically, but coming back to credit management, what I wanted to say is that even if you don't need to remind, there is still huge amount of credit management job staying with you, even if all the customers pay on time without reminder, because you need to find optimal credit term. You need to find optimal terms. Sooner or later, these terms will not work and you need to review them. Then the economy is changing.
I will say the biggest risk is by onboarding a new customers.
Yes.
It's
you don't know who you're
crucial. You really have them then to do your credit management job. It's crucial.
And you must be patient, because from my experience, each time we got new customer, first payment is late. And you got that perfect situation when all customers, really pay on time. You already established, and then there is a newcomer. And you got your perfect picture. Then there is a newcomer who is normally damaging your perfect understanding, your perfect policy, and you need to deal and you have to explain and so on and so forth. Well, yes, but that's what makes our job really interesting. Changes and applying to them. Jean-François, merci beaucoup à toi.
Merci beaucoup.
Pour les discussions que nous avions aujourd'hui and thank you very much to everyone for joining us today. If you have questions about Swiss market, I believe find Jean-François on LinkedIn. He's always open. If you are in Switzerland, I could not avoid saying that if you are doing credit management in Switzerland, don't forget to join Credit Management Association of Switzerland, which I always enjoy to speak with my colleagues. And as a tradition of all the years by credit engineering, I wish everyone a bit of good luck, which means higher possible sales, lower possible losses. Or Jean-François will correct me if it could be said correctly in French, bon crédit.
Bon crédit.
Merci et à la prochaine.
À la prochaine.